The Governor of Ogun State, Governor Ibikunle Amosunde. Well, let's move on to the fixed income market, where there's more to be done to reduce the dominance of the financial regulator in order for the FX markets to have an autonomous windows for in transactions, as it were. But this is the view of the Chief Executive of the FMDQ OTC Securities Exchange, Mr. Bola Onodele Koko, and that was while speaking to Channels Television on Tuesday.
Once DMO frees it up, you've seen what the direction of interest rates beginning to travel south, and there lies the opportunity for corporate. And I think we've been singing this song for some time, and those that are smart are already getting on it. You have to build your track record in the market, because once the pension, the buy side buys your paper once, and you do not default, and we haven't had any default in the new commercial paper built by FMDQ and the central bank, then they buy your paper all the time. So that going through that process for the first time, you could consider it a lot of work, but that rigor is very important, and the corporate governance to give credibility. If you are late to this party, if you do not start building your track record in the debt capital market, you're going to pay some basis points, higher than those that are,
those are early.
Those are early birds, and that's how it works.
They get the biggest of the worms. Yeah. Again, all this will. Well, either the government or corporate will come all the way back to FMDQ. So that means you will need to put some things in place more robust than you had been for the last few years of your existence. So if you look at the FMDQ roadmap, 5 years moving ahead, what in terms of technology, market, product development, and all that you put in to welcome the deeper participation of the corporates in the market. As government begins to wind down a little bit, the government will still be there, and I'm sure the central bank will also have a lot more to do in the FX market as well.
Thank you, boss. In terms of technology, we're not just going to start. We started about 2 years ago, and we're hoping to deliver a proprietary market system bespoke to the markets to create efficiency for our members next year in terms of technology. And if you come to FMDQ and you see the technology people today, you won't even think Christmas is coming. They're extremely busy. We have consultants, and they're pushing out. The central bank executives are also there working to ensure that...
You haven't put out the Christmas tree?
Cody hasn't done that yet. We're looking forward to that.
I need to put a call to... She's getting late to that party, to the Christmas party.
But the mood at the moment is to deliver the first module of that proprietary market system. So in terms of technology, that will roll out, and we'll start with our first module, because we need to deliver a credible repo market to this economy. For years, we've survived without a repo market. You can't think of a product diversification next year, which is interest rate and treasury bills and federal government bonds futures, without a repo market. Exactly. So that is the first module to deliver, and immediately, and we're working with the central bank on that, immediately we finalize that integration with the central bank. Then 2018...
On the FX side?
I'm talking of the fixed income side now. The central bank has been in that space with us in the last 2 years. Central bank executives and our staff working hard to ensure we have integration, and after integration, then we bring the repo market credible, where collaterals are managed every day by FMDQ, which is independent to both sides. And on the back of that, we're looking at futures.
Okay, that's Dele Koko, popularly known as Koko in the Nigerian capital markets, the CEO of the FMDQ OTC. Well, that was him speaking about some of the projections that they have for 2018. Meantime, let's quickly look at some of the numbers that we have for the markets. We'll start with the equities market, where we saw bearish sentiment in the system this week. All share index trending lower to 38,436.08, and that's down 2.09%. Market capitalization went higher, on the contrary, by 0.04%. Total volume was 1.852 billion naira. Sectoral indexes, we saw the banking sector dipping, and the insurance index also narrowing. Industrial goods sector also narrowed 4.79%. For the top gainers, it was Beggar Paints, Dangote Sugar, and Nascon. Dangote Sugar and Nascom belonging to the same family. In terms of the top losers, we have Linkage Assurance, Learn Africa, and Flour Mills, which shared 11.91%. Some profits taken on that side of the market. Let's do some fixed income numbers now, where the CBN, on behalf of the Debt Management Office, on Wednesday auctioned 100 billion naira for the 5-year and 10-year tenor papers. That's talking about the July 2021 and March 2027 papers. The yields for the 5-year bond and shed some points, dropping from 14.79% to 3.19%, while the 10-year paper came down from 14.80% to 3.21%. Some moderations basically on that side of things. For the unlisted securities market, we've got the USI coming down by some 0.4%, while the market capitalization also slipped 416.83 billion naira. Volume deals and value for year to date, you see those numbers, while Friesland, Campina, and Afriland Properties took the position for gainers and losers respectively. We'll go for a break now, and when we come back, we'll be previewing that green bond, the very first in Africa, that has to be launched on the Nigerian Stock Exchange next week.